I cover Fintech for Reuters, and you've heard Fintech mentioned at least 10 times by now. So you must, if you don't know what it is yet, you must be wondering, what is Fintech? So Fintech is essentially just an abbreviation of financial technology, and it's a very broad term. And it is the industry, I guess, that's known for championing the use of software and digital technology in finance, be it capital markets or retail. So it's an incredibly broad term, so it means the ATM you're using in a bodega, but it also means really sophisticated software to spot fishy behavior in markets. So the term fintech is relatively new. I think people started using it more broadly a couple of years ago, but definitely the use of technology in finance is nothing new. So because banks and exchanges have been obviously always big technology spenders. So what's really changed? Why suddenly fintech and everybody's talking about technology? So I guess the internet, right? So people in fintech believe that in the same way that digital technology have disrupted numerous industries, like, for example, think of Blockbuster and Netflix, and travel, the same will happen to finance. There will be more tech-savvy and nimble companies that are able to take better advantage of technology and offer more user-friendly services to their clients for a lower cost. So this quote is often used by fintech people to describe what their vision is, and it's a quote from Bill Gates from 1994. I hope it's actually his. Everybody keeps using it, but I wasn't there back then. So he said that banking is necessary, but banks are not, is the idea that we'll be able to do banking with Google or someone else or someone that has yet to come up, because you don't really need the banks anymore. So because it's a really broad term, it encompasses any area in finance that has now startups that are sort of Silicon Valley type companies. So you have payments, lending, and also sort of institutional type businesses. So payments is probably the most, here's Jack with his little device. So payments is probably the most mature and competitive area, I guess, in fintech. And it's, again, extremely broad. So P2P payments is the one that I guess people are more familiar with. It's companies like Venmo or the recently launched service by banks called Zelle, and it enables people to pay each other more easily. And I guess in some cases, before Zelle came along, without the need of banks, at least in the front end. And then banks were still there in the back end moving the money, really. So another area in payments that's quite popular with fintech companies is remittances, and remittances are the money that migrant workers send home. These companies think that there is no need for companies like Western Union or MoneyGram or even banks to charge very high fees to send your money around, because technology now makes it much cheaper. So some of the biggest names are TransferWise, which is based out of London, WorldRemit, and Remitly. And another area that's, again, very massive and is getting some more activity now in terms of M&A is payments processing. So you would not really stumble upon these companies and know it if you're a consumer, unless maybe you're paying at a store that has Stripe and you can see their little device. So the company, not Stripe, sorry, I mean Square. So Square is the company that was founded by Jack Dorsey. Stripe and Adyen are all companies that process payments between merchants and consumers, or between merchants and merchants. Another big fintech area is online lending. And I guess online lending emerged after the financial crisis because banks started drastically reducing their lending to more risky clients and to small businesses. And so fintech stepped in and started using technology to lower the cost of lending and make it more worthwhile to address some of the sectors that were being overlooked. So you have P2P lenders that are essentially websites that connect borrowers and lenders together, and they don't take any of the credit risk. And they then, in turn, sell some of their loans or package some of their loans for institutional investors. Or better, the institutional investors participate on the platforms, whereas direct online lenders take the credit risk and sometimes sell it to capital markets firms. But both of them just essentially lend to you in a matter of minutes on a website. Another big area is wealth management. So you might have heard of so-called robo-advisors, which are companies that give financial advice and portfolio management through the use of computer algorithms. So robo-advisors essentially invest their clients' money in portfolio made up of ETFs. And this doing everything automatically and not having humans obviously reduces the cost, which means you can now service clients that have a lot less money to invest. So the startups that are famous in the US are Betterment, Wealthfred, and Sigfig, but it's one of the areas where incumbents have moved a lot quicker. So we've seen Vanguard and Charles Schwab launch similar services. Banks are also ready to go. Morgan Stanley, Goldman Sachs, and UBS are going to launch their services. So I guess this is one of the areas in fintech that shows that, I mean, it's very hard to be a financial services business, even if you have like really nice shiny tech, and that the risk of incumbents fighting back is quite high. So again, this is probably the most hypey area in fintech you might have heard of. It's blockchain and virtual currencies. How many of you know what blockchain is? Good, like honest answers. So if you ask this now, I think at a financial services conference, everybody will raise their hand and start yelling. But remember that most people don't actually know how it works, I think. And I speak to many. So blockchain is essentially the software that first emerged as the system that makes cryptocurrency Bitcoin work. So it's a system that ensures that I'm not spending my Bitcoins twice. So it's also known as distributed ledger technology because it is essentially a distributed ledger of transactions or information that is shared and maintained by a network of computers, which means you no longer need a central authority to verify that the data that like a group of people or a group of computers see is the valid one. So you can think about it, and I don't know, I hope no blockchain expert is here and will yell at me, but I like to think of it as a sort of Google Doc that we can all see, we can all change, but we can only make changes if every computer there, every person that is looking at the Google Doc approves to that change. This means that it could potentially drastically reduce the complexity and the money that is spent on very complex things in finance and very burdensome processes like securities settlement. Of course, it's worth noting that while banks are doing lots of experiments and so are exchanges, no real use case has like drastically taken off right now. So far, the biggest blockchain working is the one that powers Bitcoin. So yeah, there's loads of Bitcoin companies and blockchain companies, as you can see now. This has been growing even more lately because of so-called initial coin offerings, which are essentially a new type of fundraising that blockchain companies do. They issue some coins to the public and they raise cash to potentially build products. Again, not many have already built the products that they've raised millions for. So you might be wondering by now, is fintech actually disrupting finance? Should I get a job at CME, at NASDAQ, or should I go for a fintech startup? So it's 2017 and banks are still here. No fintech has actually massively disrupted a bank yet. They're all there. But fintech is really having an impact, at least from when I started covering it. Banks and just large financial institutions have become more aware of the importance of digital and user experience and focusing on their clients. So banks have started launching or have like reinforced their venture arms or launched new venture arms, and they've started partnering with startups more to sort of focus more on digital. But I think probably one of the areas that might seem more like threatening to big players is not really the startups coming for their pie, but actually the big technology companies. Think of Apple, Google, Amazon, or Alibaba in China. They are all slowly creeping into financial services, and they certainly have both the distribution and the like big checks to support an expansion. So banks should probably care. If you look at, I'm always kind of shocked by this statistic, but Ant Financial is the financial arm of Alibaba. They have 450 million active users, and Citi, by comparison, has 200 million. Obviously, if you're in China, that helps because there's many more people, but it's quite impressive. So what is actually holding big banks from doing more? Many things. One of the things is legacy. Because they've been investing in technology for so long, it means they have to deal with all these, like all the technology that they might have been sitting there from the 1970s. Like they literally have COBOL still in their systems. And regulation is obviously a problem. They're closely watched and they're managing people's money, and they can't just go off and do whatever they want, which technically neither should a startup, but I guess they have less of the regulator's eye when they start. And also inertia and the risk of cannibalizing your own existing business, which might be under threat in the future, but might be doing fine for now. So I guess in a sign of how important fintech is now, Reuters has recently launched a page just this month. So if you want to read all about fintech or from all around the world, just check it out. And if you have any questions, feel free to email me or tweet at me. Or if you want to sign up to my newsletter, if you're interested in fintech, I send stories out every week from all around the world and other publications.